Kroger is being requested. Guys, remember, there's the reason I'm changing the first two pillars is, one, I care about cash flow more than earnings. And I care about long-term cash flow more than earnings. And PE only looks at the most recent 1 year. It is something we'll still look at, but we're not going to have it as one of the 8 pillars. And 2, profit margin. Because profit margin varies in every business. And I think I was a little misguided by worrying about profit. And I don't really worry about it. I always want to look at it and see, are there healthy margins where if there's a downturn, they can still sell enough and things like that. Grocery stores have terrible margins. That's fine. Kroger, $27 billion company, 10.6 PE, check mark, 2% profit margin. Okay, so checks so far. Free cash flow in the last year, 3.69. Free cash flow in the last 5 years, average of 1.6. So clearly the last year was way better than the previous 5 years. It makes sense because as everybody's shut down, everybody's eating at home more, there was no way to eat out at restaurants, et cetera. So I wouldn't buy just based on the last year's data. This is especially an area you want to go look at long-term numbers. Return on invested capital, 6.38. Not very great, but it's a grocery store with low margins. If you buy it at the right price, it can be okay. They do pay a dividend of 1.9%, and that eats up $500 million of their free cash flow. So even in the last 5 years, it's only 1/3 of their free cash flow, so I kind of like that a lot. So far, we have 2 checks, PE and, 1 check and 1 X. PE is a check, X on the profit margin. So let's go to their income statement. Oh my gosh, look at this jump. Big. 115 million to 132, and it was a $10 billion increase in that last year. So it's a check mark there for sure. Earnings, oh my God. Oh, it's actually not that big of a jump. 1.98 to 2.6, check mark there. But it's a big jump for the previous year. So again, you want to go over long periods of time on their earnings and their cash flow because I don't think it's right to account for this last year, to look at this last year. Shares outstanding, guys, 930 to 760, massive check mark. Guys, their shares outstanding are almost down 20%, which means if there were 10 shares before, you owned one of them, you own 10% of the business. It took away 20% of the shares, went down to 8. You still owe your 1 share, so instead of 10%, you now own 1 out of 8 shares, 12.5% of the company. You did nothing, and they rewarded you. Mm-hmm. They gave you a bigger piece of the company just by you holding your shares. And this will be as part of our stock analyzer tool. That'll be part of the evaluation of the company to say how many shares they have right now. Are they buying back? And if so, what rate are they buying back at? And it'll tell you what the stock will be worth, factoring that in there, because now the earnings are being split up and the cash flow is being split up amongst less shares. So you own a better piece of the company.
That's great.
So all 3 check marks there on the income statement. Balance sheet. Current assets, $13 billion. Current liabilities, 15.5. I'm not worried about that. The food business.
Oh yeah, that's right.
The food business, grocers, they tend to work on a lot of, what's it called? Credit and things like that. You look at a lot of food businesses, they're all across the board. Less cash on hand than current liabilities. It's part of the industry, so I'm not as worried about that. Free cash flow, guys, ready? Growth, 686 million to 3.7 billion, check mark. Again, guys, look at this jump. Over doubled their free cash flow last year. So I'd really take even this 5-year average lightly. Maybe people eating home more, but at 1.6 billion times 20, $32 billion. What's the company currently selling at? What was the market cap? I got market cap of 27. So it's a check mark there. So it's versus 27 market cap, it's a check mark right now. Now, the question is it worth buying it right now? Okay, well, let's think about this for a second. This is a good one to talk about.
Yeah, it is.
We had 686, 1.06, 1.16, 1.4, 3.69. I will say this though, Mo. Even though this is a big year last year, 5 years ago was a big down year.
Yeah.
So this is why you look at longer periods of time.
Right.
Maybe it's okay to factor that in there. Maybe the Kroger is a buy right now. We liked Kroger last year.
Yeah, we did. I remember.
We liked Kroger. I mean, I don't think this is bad, guys. If you believe that Kroger is going to steadily grow 2 or 3% a year, I would be looking at picking up shares as this thing went further. I mean, look at this. Geez, Pete, it got as low in December at $30. Oh, $30 a share, that's it? I mean, look, this is a very consistent, look at this. Guys, look at the stock price. Wow, it got as low as $20 in October of 17. That's incredible. Look at this, guys. In a 5-year period, a high of almost 40, a low of 17, back up to 36.
Yeah, and they were at 42 about a month ago. January.
You just need to be patient, guys.
Yeah.
These things happen. This is a booming market. This was when the stock market was going up. Look at where the stock went. Down. You will find good stocks at good prices. I wonder what happened here. Did you see this drop right here?
Yeah,
Paul?
that's a big one. I'm wondering if is that a 1-day drop?
Yeah, it looks like it. Pretty close to it. Guys, I want you guys, the little book that beats the market, in that, Greenblatt says, look at any stock and look at their 1-year high and low. You're going to see massive differences in price. So when I hear people say like, oh, stocks don't fall that much, look at any stock, look at their 5-year difference in price. There are massive fluctuations between highs and lows. Stocks don't only do this. Over the long haul, stocks will do this. But in the meantime, they go like this along the way.
Yeah, and long haul shouldn't be one year.
And long haul is not 1 year. Long haul is 10 years or more. Exactly. All right, my throat hurts. Why don't you All
right, so we're going to go with the technicals on this. Actually, it's in the sweet spot, okay, but our stochastic is kind of going sideways on us a little bit. This is one of those, like Paul was saying, it doesn't move very much. I mean, it does, but it kind of bounces in that very consolidated range, which is not super ideal for when you're trading. But we are in an uptrend right now. Somebody in the chat said they want a tracker share. This might be the tracker share one, because what I need to see on here is if we can I'm okay with this pullback that's happening today, because that is creating that W formation for us like so. So the next move would be going like that. A green candlestick is necessary. If we can just get like something like this going, that would be okay. But again, the top of this, we had a long wick on here. It went to 42.99 on January 27th. I don't think it'll get back to 42.99 in the immediate future unless there's some kind of news like that big drop that came out. I know I was reading that Kroger is going to do a lot of stuff with their online sales division, or probably ordering groceries and whatnot, which was so clutch that's when I started figuring out online grocery delivery and online going to pick it up. Oh, it's the best. You just park and they put it in your car and you get out of there. Because going to the grocery store is quite possibly one of the worst experiences that I have to go through as a human being. My brother, when he was here last week, he was going to the grocery store 2 and 3 times a day. I'm like, what are you doing? This place is the worst. But, So, I mean, if you want to do something with Kroger, just break out above Tuesday's high, and you can go and buy it. But just be very careful with it. You don't have a lot of room to run, so play with stops.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.